Hello, everyone. Welcome to the NT Trading. Today, the Indian stock market showed resilience, with IT and banking stocks driving gains, while investors kept a close watch on domestic inflation data, which is anticipated to offer insights on the potential for a future rate cut. As of today's close, the Nifty 50 rose by 0.66%, reaching 25,127.95 points, and the S&P BSE Sensex gained 0.73%, ending at 81,973.05 points. The past 2 weeks, however, have been challenging for the markets. We saw a decline of around 5% in the benchmark indices, driven largely by concerns over escalating geopolitical tensions in the Middle East, a muted corporate earnings outlook, and continued foreign institutional investor outflows. Despite these pressures, today's performance demonstrates investor confidence in select sectors, especially IT and financials. In today's session, financials and banks, which hold significant weight on the Nifty 50, advanced by 1% and 1.3%, respectively. This rebound is noteworthy given their steep falls of 5.2% and 4.9% over the past 2 weeks. Notably, HDFC Bank, a heavyweight on the Nifty 50, surged by 2.3% and emerged as one of the top percentage gainers on the benchmark. As HDFC Bank prepares to release its September quarter earnings this week, investors are keenly awaiting the bank's financial performance, hoping it might set a positive tone for the rest of the financial sector. The IT sector also demonstrated strong momentum today, led by Wipro's announcement of a bonus share issue, which resulted in a 4% rise in its stock price and a 1.3% lift in the broader IT index. This positive movement in IT stocks highlights renewed investor interest, particularly as these companies play a crucial role in India's export-driven economy. Given the global demand for technology solutions, the IT sector remains a key focus area, and companies like Wipro are expected to benefit from sustained growth in this segment. Overall, 12 of the 14 major sectors advanced today. Beyond financials and IT, other sectors also contributed to the day's gains. This broad-based recovery suggests that investors are selectively positioning themselves ahead of critical data releases, which could offer further guidance on the market's direction. Inflation remains a central focus, with the September inflation figures expected shortly. Inflation trends will be pivotal in assessing the Reserve Bank of India's next steps, especially regarding interest rates. Given the current inflationary trends, a sustained decline in inflation could fuel expectations of a rate cut, which might provide a significant boost to the economy and the equity markets. As we approach the year-end, domestic and global inflation patterns, geopolitical developments, and economic indicators will continue to be major factors influencing market sentiment. Looking ahead, apart from inflation, investors will keep a close eye on the quarterly earnings season, which is in full swing. The performance of key players in sectors like banking, IT, and consumer goods will be scrutinized for any indications of underlying economic trends. HDFC Bank's upcoming earnings release is one to watch, given its impact on the broader financial sector. Similarly, IT companies' results, particularly in light of global demand and domestic policy shifts, will be influential in setting the market tone for the coming weeks. In conclusion, today's positive session reflects cautious optimism as investors weigh the prospects of a rate cut, especially if inflation data points towards easing price pressures. While geopolitical uncertainties and foreign outflows remain concerns, the focus on inflation data, along with ongoing earnings reports, will be key determinants of market direction in the short term. As always, staying informed and prepared will be essential as we navigate these dynamic market conditions.
This video is made for educational purposes only. Please don't make any investment decisions based on it. If you like the video, please like, share, and subscribe. Thank you.